In this video, I would like to teach you how to master structured trading, whether you trade crypto, forex, or assets. At first, there are two types of structured trading. There's something we call counter trend structured trading and trend trend continuation structured trading. It's just the anatomy of the price, exactly how the price move and how the price works. For instance, let's start with counter trend structured trading. So let's start with counter trend structure. In counter trend structure, I expect the price to move like this. In an uptrend, in an uptrend, as we all know that the price don normally as we all know that the price don normally move straight forward. So I expect the price to move this way. So I will be more concerned when we closes above the previous high, when we closes above this previous high, the way it's happened there. This was the previous high at first. The market closes above it to this high, another previous high, while this is also another previous high. So I expect the price to closes above this previous high. When the price closes above the previous high, which is which is the first high, I will put a 2 there. I will put sorry. So when the price closes above this high, I will put a twos. I put a vertical line here, so like this. It's not just an ordinary line, it's a zone. So you will set the zone to the highest week other previous high, which is this our former zone here. This our pink zone here. Let me change it to grey. So we the highest wick and the highest body candle is where we place the two vertical line for future trade. So I will expect the price to, after closing to above this previous high, yeah, I will expect the price to come back to the zone. So when the price come back to that zone, I will be eager to buy in an uptrend. So I will be eager to buy right here. So I'll place my long position tools. My stop loss will be the lowest candle that closes below here, and my take profit will be the new higher high. So So expect the price to move to back to the upside and create a new higher high. So when the price move back to the upside to create a new higher high, and it has already closes above this zone, sorry, and it has already closes above this zone, which is my take profit, I will mark out another vertical lines, and I will be expecting the price to come back to that zone before entering another long trend. Yeah, so it's simply straightforward, and it's very easy. This thing happens all the time in the market, either you trade crypto, forex or assets. It happens almost all the time. This is exactly how the markets move, and this is also the same thing as what they call fair value gap, because at this zone, when the market, sorry, when the market close above this high, it has to come back to the zone to take out the liquidity around here before moving back to the upside. So it's very self-explanatory. And it's very simple. So you probably have a different question like, is it like you enter trades right at that zone? There might be some situation that the price will eventually reverse back from the when it's come back to this zone. Let's try to make it up here, like exactly what I was talking about. So let's say I mark out this zone here. Let's say I mark out this zone here. Let's say I mark out this zone here, and the price come back to the zone like this. But instead of it to move backward, it reverses. Like it reverses, or it closes below the zone. So you are not going to buy right there when you see price coming back to this our zone. You wait for any candle formation, either um dodge bullish engulfing candle for you to enter trade to the upside, or a hammer candle, which the body of the candle above above the upside. So let's say in a situation where the the price closes above this our grey zone, which means the price is about to reverse. The next thing that you should be looking for is that after price closes above this zone, the next thing that you should be looking for is for the price to come back to the zone to take back the liquidity here before going back to the original direction, which is the downside. So Sorry, let me mark that one for you. So it's very self-explanatory. So when you see something like that, if when you see that the price closes above this our gray zone, which is the previous resistance area that we expected it to become support, as it happens there. When you see that the price closes above below it, we expect the price to come back to the zone. We expect the price to come back to the zone before going back to the upside. So with that, you'll be looking for any candle formation that suggests that the price is going to decline right there. More like bearish engulfing candles, dodgy candles. So this is what we call structured trading. I hope this information is very helpful to you. Please subscribe to my YouTube channel for more structured video like this, where I will be teaching you how I trade gold. I only trade gold, and this thing works every time in gold, especially when we are in a bull trend or bearish trend. It actually works well in bull trend. So as long as the price is not consolidating, this works all the time. Thanks.